Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model data cycle for Monday the 22nd till Friday the 26th of February 2021. Basically this is our model of the economic calendar for that period, and we've written up the initial ones to start with. T1 and T2 are tier 1 and tier 2 data, and we've got January for the whole month at the top, and then we've got the first 4 weeks of February, so 01 to 05 week 1, 08 to 12 week 2, 15 to 19 week 3, and 22 to 26 the last week in question, week 4. So if we make a start then, China then, January tier 1 was -5, tier 2 +10, and then we've had tier 1 weeks 1 to 4, we've gone 0, -2, -2, -2. So we've had, bearing in mind that this is discrete for January and it starts again for February, we've had a deterioration in further deterioration in tier 1 data, but it's steadied at a deteriorating level, if you like. So, and likewise for tier 2, we were neutral in the first week, and then we deteriorated and have held steady for tier 2. So China then, overall it was mixed for January, positive tier 2 +10 and negative on tier 1, deterioration, minor deterioration tier 1 and deterioration tier 2. So basically China isn't really firing in terms of the data cycle. It's arguably weak and but leveled off weak. Right, so the dollar then. January tier 1 -5, tier 2 +24. That was first. So we've got mixed, but it's quite strong on the tier 2. And then we reset for February, and you've got tier 1, you've got +1, -5, +1, +1. So you've got a deterioration in week 2 for tier 1 data, but it's come up and leveled off for weeks 3 and 4. Tier 2 +17, a deterioration in week 2 again, and then we're on the up. So we've got week 3 +19 and week 4, which is what we've just had, +36. So tier 2 data is and tier 1 data had a little downturn in week 2 of February, and then it's been roaring away. USD America's been roaring away in terms of tier 2 data, +36, and arguably that helps explain the confidence in pushing the dollar forward this week. But we won't get into that just yet. We'll review it at the end. So I'm going to start now and put the next two up. Right, welcome back. Germany now, and the EU are as a block, 27 nations I believe. Right, okay, German. Tier 1, January, +4, tier 2, +7. So good January, and then so far in February then, tier 1, +2, +2, +7, +7. So remember it resets, so we've got an improvement in tier 1 German data, and now leveling off. Tier 2 then, -4, -6, -5. First 3 weeks we've got weak tier 2 German data, which is coming off, and then we've had this big pump this week, +11 for the German data. So Germany is showing good signs in the data cycle. It's on the up in the data cycle. EUR as a block then, January -6 tier 1, tier 2 +5, so pretty mixed January. And then tier 1 you got +10, so good start to February week 1, +10, +10, +13 and +13. So we had this big ramp up in week 1 of February, and then it steadied, and then a slight increase in tier 1 and steadied off again. Likewise tier 2 then +3, +3, +4, +6, so more incremental improvement there. So Germany, strongest January, first 3 weeks was mixed and slightly weak on the tier 2, and now it's matured on the tier 1 and steaming quite nicely on the tier 2 on the up. Eurozone as a whole then, like we say, mixed, and there's an element of lag in here, so you can see that the tier 1 is pretty strong, and tier 1 data is viewed arguably as the most important. So the Eurozone's doing quite well, and it's holding its own on tier 2. So we're going to stop it there and move on to the next two. Right, welcome back again. We've got the yen, JPY, and the pound, GBP. Yen then, January, neutral tier 1, but a very healthy +17 in January. And then we've got in February we've got neutral all the way for tier 1 zeros, and tier 2 we've got improvement in the first, second week and the third week, and slightly coming off a bit in this last week. So that's where we are with the yen. We'll wrap this up later. The pound then, January tier 1 +3, tier 2 +5, so fairly steady on the up. And then this 4 weeks of February, 0, +2, +6, +8 on the tier 1, so incrementally strong for the pound. Likewise for tier 2, +2, +3, +6, +11. So we've got a steady chug positive in tier 1 and tier 2 data for the pound. So we'll stop there and then do the next tip. Right, here we are again. We've got the CAD this time, the Canadian dollar, and the AUD, the Australian dollar. CAD then, January +8 -1, mixed, pretty strong tier 1 then. February then, tier 1 -4 all the way, so we've got a deterioration in tier 1 data, which is now steady and leveled off. Tier 2 then, February +2, +2, +7, +7, an improvement which is now leveled off. Right, so AUD, January, tier 1 +2, tier 2 +6, so fairly solid January, and tier 1 for February, +3, +3, +2, +2, so positive but slightly tailing off, marginally tailing off tier 1, 0, +5, +3, +6, so an improvement week 2, coming off and now back in again, stronger again. So for the AUD. Right, last two, and then we'll do some analysis. Welcome back. Here we go then. New Zealand dollar, NZD, CHF, Swiss franc. Right, New Zealand dollar then, January, +2, -2, mixed for the whole of January. February then, tier 1 +4, +4, +4, +2, so improvement initially, then levelling off, now starting to tail off. Tier 2 then, February, +2, +6, +1, -7, so you had an improvement in the first 2 weeks, then it started to roll off weeks 3, and a significant roll off in the last week, -7. So the Swiss franc then, January 0, -2, steady to slightly weak on the tier 2. Tier 1 0, 0, 0, +2, so steady, mild improvement last week, this week that's gone. Tier 2 +2, +4, +6, +11, so incrementally strong and improving tier 2. Right. So if we'll do some analysis then, this is obviously the sister video that links with the weekly review for the Forex flows, and if you remember the monthly flows of February, we had the pound was the opposed driver at +896, so the pound was very strong in February, and the yen was equivalently weak at -819, and the dollar and the euro were sort of came back to steady. And if you look at last week, which directly links with the 22nd to the 26th here, then you've got the yen negatively driving in opposed by -286, and the dollar is the secondary positive driver at +242, with the euro and the pound holding steady in the centre ground. So if we look at the where are we? So if we look at the China data, then say China was mixed in January, and ultimately it's weakened in February. We're now -2 tier 1, -4 tier 2. So arguably China isn't firing at the moment, and so its data cycle is basically on a downward path. The dollar, however, from a tier 1 basis, it's fairly static, +1, but tier 2 is really screaming higher. It's rocket propelled. It's now +36, and the dollar was the sort of focus yesterday, the Friday on the trading day. We managed to go long the dollar from about 5 o'clock in the morning GMT, and we did very nicely off the back of phase 2 risk off, and there was a few other factors as well. But anyway, that's a side issue. Germany was strong in January, and then had a roll off period, but it now seems to be coming back. The German data cycle sort of basically has done that, and it's rolling back up now. And the euro as a block was mixed in January, and it's now starting to, particularly in tier 1, which is obviously quite relevant. Tier 1's +13, so the euro is strong. So of those four, then you've got weak China, very strong dollar, German data starting to come up, and the European Union on a tier 1 pretty strong indeed. So then if we move over to the yen's been neutral all the way for tier 1 at 0. Very strong January tier 2 +17, and starting to show a bit of strength, although it's come off a little bit in tier 2. Now remember that the yen obviously is pretty much held in a transmission with equities. It seems to be a very strong transmission there. So we've had a big pump in equities, which have only recently this week started to come off, and the yen has been pretty weak. So that's something to bear in mind there. The pound, likewise, the pound has been the opposite. The pound's been sucking in all these positive flows, and on the data cycle, it was medium to strong January. It had a bit of a dirge period, and now it's incrementally quite strong on both tier 1 and tier 2. So the pound is punching away quite nicely. The CAD then, often linked with the oil market. The oil market has been pretty strong, but only about 17 to 20% of the CAD GDP is linked to oil, so something to bear in mind as well. But anyway, if you look at the CAD, January was strong tier 1 and not so clever tier 2, and we're now we've had a big drop off in tier 1 to -4 in February, but a slight reasonable improvement in tier 2 at +7. So arguably the CAD is quite weak tier 1 with a bit of strength in tier 2. So nothing to write home about. And the AUD, which is obviously a commodity currency, linked with the commodities. It had a reasonable January, +2, +6, and then it's basically been steady at +2, +6 for the end of February. So the AUD isn't really firing either. So that gives you a clue where we are. The New Zealand dollar, which has been very strong and is the second strongest complex, in model terms. It's about 64%, 3% now off the model floor. Only the Swiss franc is higher. Anyway, New Zealand data was pretty mixed in January, and it's now arguably looking at a mature phase. It's starting to roll over tier 1, and it's definitely rolled over tier 2. So the sort of market has been really focused on the New Zealand dollar purchases off the back of arguably they had strong employment data, but the data really isn't reflecting the strength of the New Zealand dollar, and it's likely the New Zealand dollar is going to head south. But depending on what's going on in the wider market, but New Zealand dollar looks to have peaked out from our perspective. And the Swiss franc then, January pretty neutral, nothing to write home about, and we've got an improvement in tier 1 for February +2, and tier 2 has come up quite a bit, +11. So the Swiss franc is punching away quite nicely on the data cycle, but bear in mind that the Swiss franc is the highest of all the 8 complexes. It's operating at about 75% above the model floor. Doesn't have a lot of elbow room on the up, so just beware that it's already strong, even though the data cycle is starting to kick in. So really that's where we are. To summarise then, we're going to obviously do the Monday daily briefing, which will give us a heads up as to what's happening for trading on Monday and probably into next week. So watch out for that. Hope that's been useful, and see you then. Thank you very much.